Why selling puts and selling calls can be one of the most powerful tools in trading. Stay tuned. You really don't want to miss this one. Hey guys, in today's video we're going to be discussing why selling calls and selling puts can really help out your portfolio. And for a lot of you guys that are going to be watching for your very first time, I want you guys to take the time with this video, because this is just going to be a brief video, but there's going to be 2 other videos placed in the description below on how to sell puts and how to sell calls. Okay, these are very powerful techniques that are used by some of by hedge funds. Warren Buffett uses these techniques. They're techniques you can use that you might never have heard of before. Okay, if you're like me, a few years back I didn't know what selling a call was, although I bought shares of stock. So I bought shares of stock and I just pretty much held them. And I'm sure there's a lot of people, because I've talked to friends, I've talked to people that I've just discussed with. A lot of people don't know how to sell calls, and then a lot of people don't know how to sell puts. They just basically think it's too complicated. Well, we've been doing videos, but I just want to go over it briefly with you guys and show you a little bit more, and then you guys could take the time and watch the other 2 videos on the description below. Okay, all I ask, guys, is if you guys can please, if you guys find information that's informative, all I ask is if you guys can leave those thumbs up on the video. It just helps other people be able to see this video, okay, or these type of videos that really, I think, to me and my personal experience, has really helped me out in trading, really increased my portfolio, and I think it can do the same for you. Okay, so let's start off on how to sell a call and what calls we use, or what stocks we use to sell these calls. So we're going to talk about, on the screen here, we're going to talk about Fubo, and we're going to take in, I'm going to give you an example that we were just in. Okay, it's a Fubo $26 call. So if you own 100 shares of Fubo, you can do this, okay, what I'm about to explain to you. And if you own 100 shares of any other stock, you can also do this. The reason why I like to do it with Fubo is because Fubo pays great premiums for what you have to invest. Okay, I always try to make at least 30% return, 30 to 50% return on my premiums, okay, based on the price of the stock. So in this particular case, we sold a Fubo $26 call right here, guys. Okay, that's because we were able to do that because we own 100 shares of Fubo stock. Now, our date was expiration 6/11. Okay, this call was gonna be out till June 11th. If by June 11th Fubo is higher than $26, I would have to surrender my stock, but I get paid for my stock $26 a share. Okay, now, beautiful thing about selling calls, guys, and why you're going to be able to make a really steady, pretty good income is you get a premium. So what does that mean? Let me show you here. So we sold this call on, if I go to my history here, it'll say here, we sold it on May 18th. That was 2 days ago. Today is May 20th. So as of the close of today, when we sold that call, we received an automatic premium credit to our account for $70, okay, which is this number here, right? Average credit per share is 70 cents, but you multiply it times 100, because remember, it's 100 shares in order to sell a call. So it's $70. So what does that mean? That means that I received in my account, for selling a call, I received $70 just like that, okay? For owning 100 shares of Fubo that I picked up, okay? It's free money for owning stock. How beautiful is that, guys? That's pretty good, right? Stay here with me, because I'm going to get into the second part of this briefly, and I think you're going to enjoy that as well. When I got paid for it, right here, 70 cents, right? I got that credit. But since then, the price of Fubo has gone down. Therefore, the credit has also gone down, which is 34 now. So in other words, today's return was $9 right here, which is a 20% return on the 70 bucks, which is not bad, guys. In one day you made 20% off of anything. It's good. Now, total return up to this date for holding the stock for two days has been 36 bucks right here, which is a 51% return on my money so far. So, beautiful things about selling stock, selling calls, is that you can close these positions at any time. So usually in a situation like this where I've already made 50% of the money in 2 days, guys, I usually close out the position. But because tomorrow is Friday, I think the market might take a little dip, and I might get to close out that position for cheaper. I might get to close it out for, instead of 34, for 30 or 25 or 20 bucks. Maybe, you know? It's Friday. Usually there's a lot of dips on Friday. People like to sell their stock on Friday. They just want to take profits, you know. It just happens that way, okay? So that's something important you got to keep in mind when you're selling calls, when you're selling puts. All these things take, you know, go into consideration when you're doing that. Hopefully up to here, you've understood what we did here. But if you don't, I have a video down below, which is selling calls, how to sell calls. Look at that video, and that'll give you a deeper explanation on what I just spoke about, okay? So now I'm going to go to the other side. So say for example, this is the beautiful thing about selling calls, right? Flexibility. You can own the stock. As long as you own the stock, 100 shares of the stock, you can sell the calls, and basically you're receiving a rental fee. That's the way I like to put it. A rental fee every time you sell a call. That's the way I like to put it. Because basically you're loaning your shares. Somebody's using them, but they're paying you a small commission for that. But at the end of the day, they're still your shares. At the end of the day, you're still going to get paid for them, okay? So let me jump into the second part of this. So we understand there's Fubo calls. Now I'm going to keep it on the same stock. Now we're going to go to the other side. We're going to go to the selling the put, right? And selling the put, we're going to do the same thing. We're going to do August 20th. I'm just going to give you an example, okay? August 20th, we're going to sell a put. Sell a put on Fubo using the same company. We're going to say we're going to sell a put on at 24 bucks, okay? $24 put. For this $24 put, on setting the put, now you don't have to use your shares. You can, as long as you have the collateral for those 100 shares, which in this case they're asking you for a collateral of $24 per share. 24 times 100 is $2,400. As long as you have that collateral of $2,400, then you could sell a put. For that, they basically give you the same thing, a rental fee of $5.80 per share. That means that you're multiplying 580 times 100, which in turn equals $580 for having those 2,400s. So how beautiful is that? You get paid to basically for your collateral. That's basically what it is. You're getting paid for your collateral. As long as you have the money in the bank, in other words, as long as you have the money in your account, you get paid for that. How beautiful is that, right? Maybe you didn't know about this, but if you didn't, there's a video down below that talks about how to sell a put. Okay, so look at those two videos if you're still here with us. It's important you guys stick along, because I think these type of techniques can help you a lot, okay? So in this case, we're going to choose a $24 put, 580 strike, 580 premium, and this number here is your break even. So the beautiful thing about selling puts is, at the end of the day, if by August 20th, the price is below $24, if it's below $24, then you automatically get the shares at this amount, $18.20 per share, which is $18.20, right? Which is a lot less than what it's at now, because it's almost like $21. So you're covering yourself in case the stock were to fall lower. You're still getting it at a cheaper price. Now, the other side of that is that if the stock, say for example, I sell this put right now, right, and I automatically get this 580 premium, which is $580. Now let me give you an example. I sold the put, and all of a sudden Fubo skyrockets to 30 bucks. Well, guess what, guys? The higher that Fubo goes in price, the smaller this premium becomes. Therefore, I can close my position here, paying a smaller fee than what I once received. So I received this 580, but let me give you an example. If Fubo goes up $5, this 580 might turn into $200 or 150, and all I would need to do is basically pay that, and I can close out this position, and then guess what? I can go and sell another put again. So that's a beautiful thing about selling calls and selling puts. So with that, guys, I just wanted to show you guys, I wanted to run it over with you guys and make sure that you guys are getting this concept, and you can utilize this concept. You know, you can utilize it with your stock. With that, guys, if you found any of this information informative, please like and subscribe to the channel. Also, if you're not following us on Twitter, make sure you do so, because we give out a lot of plays of what we're doing, and that our Twitter feed is @InvestingOG. With that, guys, thank you so much for watching, and I'll see you on the next one.